Now, Jack, we're talking a lot about companies reinvesting, corporations paying taxes, but I have a feeling that ordinary Canadians are going to feel this too, even though the finance minister says that it's only a very small and rarefied group at the top of the income charts that will. You, I believe, have done some calculations on how many people will be affected by the capital gains tax and the kind of things that are likely to be subject to capital gains, small businesses, family cottages, those sorts of things. Can you just expand on what it means for ordinary people who may get a once in a lifetime capital gain? And how many are there?
Well, I think, first of all, the minister was very wrong in the way that the data was reported, where she said only 1.4% of taxpayers will be affected. This is kind of gives an idea that the people who get over $250,000 in capital gains, because the new rate applies to only capital gains in excess of $250,000. And it was the impression was given that these people tend to get capital gains like that every year. And so it's the same small number of people that are going to be affected. That was totally wrong, because on a lifetime basis, there are many people that get more than $250,000 of capital gains in a year, but they may only do it once or twice in their lifetime. A good example of that, of course, is someone who buys a cottage in 1980, and let's say the cost of that cottage was $100,000, and then they sell it for 45 years later for let's say $500,000. So there's a capital gain of $400,000, but some of that is just simply due to inflation, and it's not. And often this kind of money is what people use for their retirement as well, just like all the money that's put into a pension fund or an RSP. There's a huge amount of money that pays out an annual pension every year. So it's when you actually look at the data, and I did this, there's a lot of people who, without the $250,000 in capital gains, and this was just in the recent data, if they didn't get over $250,000 in capital gains, their actual income, taxable income, half the population was below $100,000. So a lot of middle class people were affected. In fact, 10% of the population would have only had $18,000 in taxable income. And that might be surprising, but I'm not surprised, because there could be people who died leaving an estate that's subject to the capital gains tax at that point, and they don't have a lot of income at that point. And it also could be farmers, for example. They tend not to have a lot of money every year, not a lot of cash, but the one thing they do have is land. And of course, when they die, or if they sell their land, and that's the time when they get a lot of money through, by selling their property, which is, of course, part of their retirement income when they do retire. So there's a lot of middle class people that are going to be affected. So I found, I was given some data that Statistics Canada has put together. And what it showed is that in 2011, for example, there were about 44,000 people that had capital gains more than $250,000. However, out of that 44,000, 2/3 only claimed capital gains of that amount in that year. In the next 10 years, they didn't claim it at all. So 2/3 of that 44,000 people only claimed capital gains more than $250,000 in just 1 year, and had less than that in other years. Or didn't have any, didn't have capital gains that would go over the $250,000 mark. And so I did a calculation, sort of taking into account the whole population, to find how much on a lifetime basis people actually do pay this capital gains tax rate that will now be over $250,000. And I calculated, and this is a rough estimate, I admit, because I didn't have all the data I would have liked, but I estimated about 1.25 million people are affected by the
Really?
gains tax increase for this year, not just 44,000 people.